80 bips. We're at 80 bips, OAT bunts. How much wider do you think that could go?
That's going to go another 20, 25 basis points further for the guy. Why do I say that? Because if you look at French bonds, the 10-year yield is offering around 3.22. If you look at the Italian yield, it's at 3.92. Now, Italian debt is rated much lower than France, of course, so the two are not comparable. But you know, S&P already lowered the rating on France's credit rating to AA-. So the market's fears are what happens if the National Rally comes to power, or if the left coalition comes to power, or you know, some combination of it. So the markets have to price that risk, and where that will take us is somewhere at an intermediate point between France and Italy. So that will mean about another 20, 25 basis points on the French 10-year yield guy.
Is 100 bips between France and Germany sustainable? What happens at that point?
Well, it all depends on what happens after July 7th. If we get to know the results are more investor-friendly, then obviously French bonds will rally. If, on the other hand, the National Rally comes out and says, you know, we're not as much to be feared as the markets are fearing us, our policies are going to be more market-friendly, i.e. the fiscal deficit isn't going to blow out, we are going to contain fiscal deficit, then that will send a message of reassurance to investors. That is when you want to pile back into French bonds. So over the long term, if everything goes well, if there is no Frexit, then 100 basis points or thereabouts would be a level to buy back into French government bonds. But that is not the point we are at yet.
But is there a new, in 10 seconds, is there a new fair value that is higher than it was but lower than potentially we're going to? In 10 seconds.
Yeah. That's about another 20, 25 basis points in yield because the bonds are already trading at a discount. There's more to go.